Good morning, viewers, and welcome to another edition of the Economy and Politics Show. Today, brand new week as we look at developments in the global and Nigerian oil and gas industry. What will shape it in the year 2021? We'll be discussing that today. And we have joining us virtually Dr. Tominiyi Owolabi, is the partner, oil and gas and special projects, Olaniwun Ajayi legal firm. Nice to have you and Happy New Year.
It's a pleasure being back again and wishing you the best of this year.
Best of this year, and that even covers the oil and gas industry. But let's begin with the fact that yes, there's a shift in the seat of power in the United States of America, and that's President Joe Biden now taking over the helm of affairs since January 20th. And of course, a lot of concerns for the oil and gas industry as he's really pushing the Green Deal, the renewable energy activities. And just wrapping up the month of January, he was saying there's going to cut subsidies that were given to the oil and gas industries, the big bailouts. So there are really concerns. But overall, what do you think the policy thrust of the Biden administration will bring to the oil and gas industry? What are the implications at the global and for even Nigeria?
Okay, I think President Biden has always made it clear, right from his campaign, that an integral part of his administration will be to combat climate change. And he was reported to have said that he's going to push the United States to transition from the oil industry. And we can see that he wasted no time. Within 1 week of his being sworn in, he's taken a lot of actions aimed at restricting exploration, and B, at also limiting investment in oil and gas infrastructure. I'm sure for those who follow the news, we know he's signed executive orders suspending the grant of permits on federal lands, drilling on federal lands and waters, and is also suspended drilling on the Alaska Arctic Wildlife National Park. And while it's arguable at this time what impact that will have on U.S. oil and gas production, because the federal land, as we've been told, constitutes just probably less than 10% of explorable land in the U.S. And so this is not likely to have any significant impact in the now. But I think what we should take note of is that these actions are setting the tone for the next 4 years. And we're beginning to see that this is an administration that's very, very keen on protecting the climate, and they will do everything to cut greenhouse emission. And so a number of things that experts have said we should look forward to is the last administration gave tax benefits to players in the sector, which led to liquidity that allowed for more investment in the sector. We're going to see that being rolled back. We're going to see an overhaul of regulation in the sector. And of course, that would have a lot of painful impact on players in the market, in the sector, and those who are thinking of investing in the sector. As he's already set the tone, we'll see restrictions on exploration and also restrictions on investment in oil and gas infrastructure. And what we also need to also pay attention to is how his foreign policy may also impact the global oil market. We know that this current administration has a different view of how to treat Iran compared to the previous administration. And so there's a possibility that there may be a new Iran nuclear deal, which will see the easing of sanctions on Iran. And we all know what that impact would have on global oil production. So as a whole, while the impact may not be felt immediately, because we don't see a significant drop in US production yet, although it's been forecasted that this year US is going to import more oil. But we think that in the next 2 to 3 years, we'll begin to see an impact on global oil and gas sector of the policies of the Biden administration. And so we should brace for more action in that regard from this administration.
Yeah, so definitely next 2 3 years we'll be seeing impact on global and gas industries, particularly investments and activities. Some of the oil and gas players are also giving like
Yes.
20 or 30% of the activities exploring renewables. How is that also changing the shift in technology?
Okay, I think the push for renewables is going stronger every year. I think it's a reasonable and responsible thing to do. And while there is the push for renewables, I think OPEC still released a report, or the Secretary General of OPEC was credited recently, I think in the last 1 or 2 days, as stating clearly that based on research and analysis, the world will still rely on fossil fuel for 50% of its energy need, even by the year 2050. And so it's the responsible thing to do to move towards renewables, but there's still a lot of research and a lot of spending that is required to get renewables to a point that is as cost efficient that would drive a lot of the power need in the world today. And so clearly a lot of companies, a lot of institutions, a lot of key players in the sector are moving towards renewables. But that is not saying a lot of investment is still not being made in the traditional fossil fuel sector. And so, yes, we're seeing the move, but the sector is still a very, very important sector for the world. Today, oil is still the most important commodity sold in the world. And we see that happening for the next few years. So just to answer your question directly, we do not see that impacting the global oil supply now. In the next 10 to 15 years, the impact will begin to be felt more. But we're not there yet. And you should also take into consideration the state of play in emerging markets, places like Nigeria, where we don't even have the resource to make the investment to transition to renewables, either in the appliances we use, the cars we drive, and things of that nature. So yes, it's the future, but we're still very, very, very in play with fossil fuels.
Very well noted. You brought in OPEC, the oil producers exporting countries, and OPEC marking 45 years, of course, trying to help in bringing stability, oil production and activities, even with innovative OPEC Plus. But how do you see their role this year in the area of production, stability, and pricing and implications for Nigeria? We hope that this year, at least we can close with between $50 to $55 per barrel. That will help for our revenue. What do you see play out?
Clearly, OPEC and OPEC Plus, as we say these days, have a clear role to play in determination of pricing and also supply of oil in the world today. And in its most recent oil market report, OPEC was said to have forecasted for this year annual global oil demand growth of around 5.9 million barrels per day, bringing the average oil demand, daily oil demand number to about 95.8 million barrels per day. And OPEC have said that this growth, going back to the loss of about 9.8 million barrels per day last year due to COVID, this growth is going to be driven largely by healthy recovery of economies, which is being pushed by more industrial production, healthy labor markets, and also increased car sales. And so OPEC has said we will grow by 5.9 million barrels per day this year, but that's going to be driven by industrials and transportation. If this forecast is correct, based on current production, clearly there will be a shortage, and that's good for price. But a lot of analysts have said that this forecast is based more on expectations rather than current realities. We all know what happened last year. We started last year with a lot of enthusiasm and with a lot of optimism in relation to price and supply. And nobody knew that COVID was going to hit as much as it did. And this year, the euphoria and the positive response of the market to the discovery of the vaccine has been dampened by the variants that are popping up here and there, and the fact that the second wave of the pandemic of COVID has been more aggressive than a lot of nations expected. And this has forced a lot of economies, big economies, to lock down. And those that have not locked down completely have imposed restrictions that is affecting production, affecting transportation, and ultimately the healthy recovery that OPEC built that forecast on is very, 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 very shaky. As a matter of fact, we're hearing that Saudi Arabia is already beginning to talk about cutting production by another 1 million barrels per day around February or March, so as to avoid the kind of stockpiling of product that happened sometime last year. And so this balance of expectation of economic recovery and the need to balance, supply against demand is a delicate play that would drive price in this year. Currently, supply is chasing demand. Yes, a lot of analysts have forecast price to be within the range, for Brent to be within the range of $53 to $55 this year. But I think we need to hold our breath and see what OPEC Plus does in relation to production levels and some of these activities to ensure that this price is maintained. And so, yes, we're optimistic, especially for Nigeria, but I think with what's happening in the world and the unpredictability of the pandemic, one just needs to hold one breath in relation to pricing and production levels.
So you say cautious optimism when we look at the oil outcast. All right, let's go home now. And of course, it happened this week, the public hearing on the Petroleum Industry Bill. The National Assembly, the Senate, has put action to their promise that they will give it top priority this year. We've seen some very interesting incidents, host communities really exchanging their feelings on what should be the equity or share in the whole legislation. But I guess you've been monitoring the developments in the PIB hearing at the National Assembly. Are you seeing that commitment from the legislature in saying that we can have an all-inclusive input to a legislation that will have far-reaching impacts on the country, particularly the host communities where we produce oil and gas?
I think for me, having the bill at where it is has been the most progress we've done, or the most progress we've made in a long period. And so I must commend, the National Assembly for the work that was done last year and where we got to. I know, different stakeholders have different view of the law, right? As I said, it's the most progress we've made in a long period. And I believe that there's no perfect law. And I think the PIB has been delayed largely because we've been looking for a perfect law. And the perfect law that would attend to the need and the concern of every stakeholder. I don't think that law exists. And the way to move forward is for people to accept a minimum benchmark for moving things forward in the country. Now, I've had to speak at different fora in terms of my view on the PIB. I don't think it's a perfect document, but I think it's a great document to start with, in terms of what it seeks to achieve. For the first time, the host community provisions are there. It can be improved, but I believe it's a good start, and it builds a structure that, if it's well handled and well implemented, it can begin to return long denied benefits to communities, so that, because the structure is that communities are now masters of their own destiny, and so they participate in managing their own resources, the portion at least has been earmarked for the development of the community. And so, to answer your question, would it take into consideration all the interests of all parties? No matter how great the document is, it would not. It would attempt to, but we must start somewhere. We need clarity on the regulatory framework for the sector in this country. As you asked me a few minutes ago about renewables, the world is pushing towards renewables. Our fossil fuel wealth needs to be explored now for the development of the country now. And we need the right regulatory framework to push that forward. What we operate in the Petroleum Act has been with us for several decades. We need to move on. And I think that's my own advice to the National Assembly and all the other stakeholders that are pushing for attention in this law.
You can answer the question. I know that you may not be from the oil-producing host community, but what for you will be a good example for equity share for a host community in terms of the percentage? We've seen different views, and even the Minister of State has his own perspective. But what would be the best in terms of the host community if you were given the opportunity to make that?
I think, as I said, just based on the bill that was passed previously, I believe the current provisions, for me, that's me talking now, is adequate, because the key issue, as for most things in Nigeria, is management, handling, and implementation. I know there's been debates around what percentage is right. For me, it's not so much of the percentage, it's more of what is done with this percentage that is allocated. We are all living witnesses to some of the framework that has been built previously to develop the Niger Delta region. A lot of money has been pumped into that framework. And question is, how much development has happened in the Niger Delta region by reason of that framework? And so for me, it's not so much of a percentage game. It's more of the framework and the sincerity of the people that will be driving it. The construct of the law today is that you set up a framework where the communities, the host communities, are part of the framework to manage the resource. And you need the sincerity of the players that are driving that process to ensure that the funds are used appropriately, are used for the development of the community, and are not embezzled. So that, for me, is a key issue. The focus on percentages, for me, is not the right focus. The focus is on the framework and the people that would drive the implementation. What the law provides now, I'm happy with it. Even if it's, whether it's less or more, it's great. The key issue is it going to be another drain or another pipe or another way that resources is filtered into the pockets of few? Or is it a mechanism, or is there a framework that ensures that the young child that is growing up in that community has his education, has his health, and has his future ensured and guaranteed by the funds that have been earmarked for the community?
And so on the PIB, Dr. Tominiyi, based on this, if an investor comes, let's say Diamond Oil and Gas, let me just give a name of a company, comes and has between Angola and Nigeria to invest in, based on what you've seen in this PIB, will it make you say yes, if it's signed into law by the president, we can put Nigeria in scope and invest based on what you've seen in the legislation?
Okay.
Make Nigeria more attractive?
Okay, so I'll look at that in two ways. One is the letter of the law, and I keep harping on the operation of the law. Personally, I believe a large part of the law works. The attempt, it's going to lead to a major change in the administration, governance, and structure of the sector. The commercialization of the NNPC is great. It's a fantastic development, subject to it being implemented appropriately. I'm less concerned by the administration structure. Considering the fact that a lot of that would evolve from current DP in the ministry, I'm less concerned about that. It's more of how they can evolve new thinking to justify the restructuring. That is the key. The IJV structure also is very interesting. I'm quite excited about that, and that's something to watch carefully. It's meant to create self-funding companies that can easily access both equity and debt funding from the market. The interesting thing, though, is that the second schedule of the law, which provides a framework for the establishment of the IJVs, have already baked into the law some provisions that are more favorable to NNPC. So it's, we need to wait to see how the IOCs and other players and other partners of NNPC react to that in terms of an implementation of the IJV. So overall, I believe that the law, first of all, provides clarity on a number of issues, will improve investment in some area, not all areas. And but the key issue is whether the law supports ease of doing business in the sector in Nigeria. And that is what would determine whether an investor goes to Angola in preference to Nigeria. The key issue that we need to deal with is not, I'm sure under the old regime or the current regime, if doing business in Nigeria, you have clarity on the rules, it's easy to get your permits out, you don't have any problems with government officials, people would invest more here. And so for me, the law in itself does not solve the ease of doing business challenge. It's the culture of the implementers of the law that needs to deal with that. And so if it's the same people that are in NNPC towers that are transitioning into the commercialized venture, or the same people that were in the various government agencies that are transitioning into the administration arm, and there's no change in thinking or change in approach or change in philosophy, then yes, we have a brand new law, but if it's taking me days to get my permits and it's taking me days to get things through, then it will affect the ability to attract investment in this country. Yes, the fiscal regime is important. Yes, the administration structure is important. Yes, the investment structure in terms of IJV is important. But what is most important, I believe, is the culture that drives the implementation of this law. And if that doesn't change from what we have currently, then we will not attract a lot more investment than we are currently attracting. That's my view.
Yeah, and even as we're looking at the PIB getting passed and signed finally, we already have the Dangote petrochemical refinery. We saw the lighting up, which is an interesting story for investors. I mean, people saw the lighting up of the Dangote refinery, which shows that 2021 is a big year for it to definitely kick off operations. We see other prospects. Boa Refinery planning their petroleum refinery in Akwa Ibom State, and several others, what you call the modular refineries and projects already getting some steam. So in terms of deepening the oil and gas investment and infrastructure, what do you think needs to be addressed more to improve the infrastructure level for the already laid investments that we have in the country? We have the oil and gas free trade zone where we need to improve logistics. What other enabling infrastructures needs to be addressed to deepen all this investment already on ground?
You mentioned clearly, in terms of infrastructural needs, I think the key focus for us as a nation are the processing areas. So we need to commercialize our crude, we need to process our crude, we also need to process our gas. Gas is a key factor in the country for this year. I know the Ministry of the Federal Government just launched the National Gas Expansion Program for LPG and CNG. That is exciting. So that is an area. Gas infrastructure is still begging for a lot of attention. Begging, as I said, begging because if we can appropriately pipe gas to where it's needed across this nation, it's going to turn around this nation overnight. It's going to help in the power sector. It's going to help in the industrial sector. It's going to help a great deal. So the gas infrastructure is in major need of attention. I believe that in terms of activities, investment activities this year, the NLNG Train 7, which is kicking off, is going to bring about a lot of activities and investments into the country. That plant has a very robust local content plan package, and so that's going to, throw quite a lot of activities into the local market in terms of people who are supporting the plant. You've also mentioned refinery. Refinery is a key one. We're talking about Bua. Port Harcourt refinery is also receiving quite a lot of attention. NNPC is looking at doing quite a lot there. There's a need to push some activity there. But in terms of what would make those investments happen, of course, this year, as it is the whole world, the pandemic is a key factor. Last year, we saw investment shrink on account of the pandemic. And so the pandemic is going to dictate a lot of tone of what happens. Fortunately, no human or no government really has a hang over that. And so it's something we need to watch. That will impact the ability to attract investment. The other key sector is something I've mentioned earlier on, is the passage of the PIB will bring a lot of clarity. The fact that it's been hanging, it's not helping investments at all. Investors need to have a clear view of the direction of travel of the country they are investing in. And if things are going to change, so for instance, if an investor is entering into a venture with NNPC and NNPC is going to change form in a few months' time, it's going to put a break on the activity of the investor. And so clarity on the direction of travel regulatory-wise is a key one. And that would also unplug a lot of investments in the sector. The other thing which we've been talking about in the country, which we've done some work on, but which we need to keep doing work on, is improving our ease of doing business. If investors are unable to come into the country easily, whether get visas easily, I know there's a visa on arrival and all those things, come into the country easily, get licenses easily, invest easily, be able to take their returns out, it will affect investment. The other big elephant in the room is Forex. Naira and dollars are foreign exchange. I know that things have calmed a bit, but the CBN did some gymnastics towards the end of last year that hit up the market, and people panicked. And it's important that the CBN as the apex regulator for that sector is speaking the right thing, is saying the right things, because every statement by the governor has an impact on the market. Because investors would like to know that their investments, they are capable of being able to repatriate it easily. And when there are challenges in sourcing dollars, access to dollars, or being able to repatriate dollars easily, that will have impact on the attractiveness of our market to investments. And so I think for us to improve the investment climate, we need to pay attention to those things, and we'll see a better 2021 in terms of investment into the sector.
2020 was indeed a challenging year for the oil and gas industries. You saw oil major oil companies having losses they've never experienced in the last 3 decades. So definitely, like you said, hopefully with the vaccinations, with stability, with activities resuming, we should see some level of activities in the oil and gas industry and some respite. But of course, you've listed some of the key things to watch, and the PIB passage signing is very key. And also the ease of doing business and the foreign exchange management will be also very, very important. Thank you very much, Dr. Tominiyi Owolabi, for the time. It was very nice having you to share your thoughts on the outlook of the oil and gas industry globally. And Nigeria. Mr. Tominiyi Owolabi is the partner for oil and gas and special projects at Olaniwun Ajayi Legal Practitioners, and has been sharing his thoughts on what will really impact the oil and gas industry in Nigeria. That will be all for this edition of the Economy and Politics Show. You can join our website, www.proshng.com, to watch our videos, read our stories and news reports, particularly around the oil and gas industry. If you go on our website, on the right hand of the bar, scroll down, you see oil and gas stories. We have them all there for you to get further perspectives on what will shape the industry in 2021. To come your way again, thank you for watching. Have a nice day, and please stay safe.